In today's video, we're going to talk about group life insurance, which is what you would get through your employer, versus individual life insurance, which is what you would get if you went on your own to an insurance company. What's up, guys? For those of you who do not know me, my name is Philip Setter. I'm the founder and CEO of Affinity Life, which is an online life insurance brokerage here in Canada. But I'd like to tell you guys a little bit more about that later on in this video. Let's just get right into it. Most employers in Canada will offer some type of insurance benefits package that'll include health, dental, prescriptions, sometimes disability, and sometimes life insurance. Now, group life insurance works a little bit differently than individual life insurance. Group life insurance, essentially, you're part of a larger contract where there's multiple different individuals that are part of this contract. So you don't own this contract personally, you're just part of the overall group. And with that, there's a few differences. So number one, the insurance company can actually change the premiums for this without your consent. So if they were going to do that, they would have to do it for the entire group, but they do have the ability to do that depending on if maybe there's more claims or less claims and they need to raise the price, or, well, they're probably never going to lower the price, but in case they needed to raise the price because they had more claims than anticipated. Number two, if it got so expensive for them that they had to cancel this contract, they do have that ability, although I don't know why they would. I imagine that they would just keep raising the price and then keep the insurance in force, because then of course they're making money, but they do have that ability, so that's something you should be aware of. Now, when you start your new job, or if you've been at your employer for a long time, you have access to this group life insurance plan. However, when you quit that job or you're terminated for whatever reason, you're not going to be able to take that life insurance with you. Now, some group life contracts here in Canada do have the ability for you to transfer that to yourself individually and personally without medical underwriting. However, not all of them do, and it's usually going to be assessed at the time that you leave that employer. So what I mean by that is, let's say you started a job when you were 20, and then you wanted to leave that job maybe when you were 30 or 35, and you wanted to take that life insurance with you because maybe you had some adverse health conditions at that point, you couldn't qualify anywhere else. Well, you are able to get that life insurance without a medical exam. However, you are going to be attaining that life insurance at your new age, not 20 when you started your job, but 30 or 35 when you're leaving your job. However, one of the biggest benefits about group life insurance is, of course, your employer is paying for it, or at least hopefully they're paying for it. Now, this is absolutely by far one of the greatest benefits of group life insurance. So if your employer is paying for this benefit, let's say they're paying 100% of this benefit, what you're going to receive at the end of the year is what's known as a taxable benefit. So you're not paying the premium, however, you are being taxed upon the premium that they're paying on your behalf. So it's not like you're paying the full premium, but you are getting that portion added to your income. So let me explain how that works here real quick, okay? Hypothetically, let's say that this life insurance costs $1,000 per year, hypothetically. Now, your employer, the company, is going to pay that on your behalf. So they say, not a problem, we're gonna pay it for you. We paid that $1,000 and we paid it out of our own pockets, okay? However, they need to allocate it to you as a taxable benefit because your beneficiaries are essentially gonna be receiving that benefit, not the corporation. So again, hypothetically, let's say that you made $50,000 in your job that year, you would be taxed at $51,000. So depending on what your marginal tax rate is, you would pay some small taxes on that extra added taxable benefit, but it would not be anywhere close to the entire cost of the insurance. So in almost all cases, if your employer is paying for your insurance for you, it's 100% a good option. Now, the other two ways that you can essentially have this paid for is your employer might partially pay for some of that benefit. So they might say, we'll pay 50% and you pay the other 50%. And then of course, the other one is you pay for it 100% yourself. In that case, of course, there's no taxable benefit because you're paying it yourself. And in the case where they partially pay for it, the portion that you pay, of course, doesn't become a taxable benefit. The portion they pay, however, does become a taxable benefit to you. And of course, I mean, I shouldn't have to say this, but maybe I'll say it anyways, the life insurance proceeds are tax-free to your beneficiaries, similar to any other type of life insurance. So typically how group life insurance will work is you'll have a basic amount that everybody is eligible for. Now, typically this could be 1 to 2 times your annual salary, or it could just be a fixed amount, anywhere from, let's say, $25,000 to $100,000 of coverage, somewhere in that range. And they'll say, no problem, we'll give this to you, no medical exam, no underwriting, no nothing, here you go. And typically the employer will pay for that portion, which is a huge added bonus. However, if you needed additional coverage, which in most cases you would, because 1 to 2 times your annual salary isn't really that much, it's not really gonna help out that much if something were to happen to you, that's when you would have to apply for additional coverage through your group employer. And now I'll explain why I don't think this is a really good option. Number one is you're still gonna have to go through a full underwriting process, similar to what you have to do with the traditional life insurance if you personally owned it yourself. But number two, you're still gonna go through that underwriting process. However, it's still gonna be contained in that group contract. So you still run into the same problems. You don't own the contract, you can't take it with you when you leave, and it might be more expensive than if you just went on your own and got your own contract regardless. Some of these group life contracts will also have a dependent basic life insurance amount as well. So if you have a dependent such as a spouse or other children, there might be a basic amount such as $5,000 or $10,000 that's included, and that's a good thing. By the way, at the beginning of this video, I mentioned that I did want to tell you guys more about Affinity Life, so here it is. Affinity Life is an online life insurance platform that we founded in 2020. And essentially you can go to the website, which I'll put in the description below, and you can view quotes 100% online without the need to talk to an advisor. You can get a needs analysis done, a recommendation from us, and you can apply 100% online without having to get on the phone or see anybody in person. So if that sounds interesting to you, check the link in the description. Now let's talk about individual life insurance. So if you just went out and got your own individual life insurance through a carrier here in Canada and how that would differ. Well, here's the big difference is you get to choose the term that you want. It's not tied to your job, it's tied to how long you need it for. So maybe you need it for 10 years or 20 years or 30 years. Maybe you need a different product besides term. Maybe you need a whole life or some other type of product, permanent life insurance. You get to pick that. It's not stipulated by the group plan. The coverage amount is substantially higher in most cases. With a group coverage plan, typically there's that basic amount where it's 1 to 2 times your annual salary, and you can get a little bit more if you opt to get the additional coverage. But with a personal plan, I mean, you can get as much as you need, 5, 10, 15 million if that's what you needed. With a group plan, it's a lot more constrained to a lower amount. With an individual life insurance plan as well, typically the rates are going to be a lot better, as well as the fact that when you lock in a contract when you're younger, say when you're 20, 25, or 30, you're gonna lock in that rate for whatever your term is. Maybe you pick 20 years or 30 years, and your rate is gonna be significantly better had maybe you started a job when you were 20 and then you quit it at 35, and now you need to go and look at getting life insurance at this point. So sometimes it's good when you start your job to have the group coverage and then opt to get whatever additional coverage you need, lock in a good rate, and get it individually and personally owned. To sum this up, if your employer is paying for that basic amount, of course, it's a no-brainer. Go ahead and get that coverage. Even with the small taxable benefit that you're gonna have allocated towards you, if they're paying for it, it's still worth it. And another thing too, if you had any adverse health conditions that might give you a negative rating, you're not gonna get that on the group plan because it's just a blended rate with a bunch of other people and it's not specific to you. And of course, if you're not healthy, then, you know, that might be a really good thing. If you are really healthy and you have no adverse health side effects, that's not a great thing. But if you did have something against you, this would be a good thing. But I would say if you needed an additional amount above and beyond what the basic amount of life insurance is through your employer, I would opt to get a personal life insurance plan and not an additional amount through the group plan. With that being said, if you guys have any other questions, feel free to drop them in the comments below. And if you guys are enjoying this content, all I ask is that you give it a thumbs up, and I'll see you guys in the next one.